I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, we got the Fed decision. Jerome Powell took the podium yesterday, and the market fell.
Yeah, I don't like the characterization that he didn't communicate well or didn't get it right. I mean, could he have done it better? Anyone can do anything better in retrospect, but remember what he's caught between Scylla and Charybdis, okay? He knows that the president's going to attack him no matter what he does and call names, and it's very distracting. It distracts you from doing your job. And he also has got a lot of positive data. In employment, typically the Fed would react to employment. That's historically what they do. So he had to cut because manufacturing's down, and the manufacturing is down because of the president's tariffs. So what's he supposed to say? I made a mistake in December, and by the way, the president is killing us with tariffs. Then what would happen is he would take the bait of the president. And then the president would be merciless because he's a merciless guy. So what all that Powell wants to do is get out alive. And I think people should be more sympathetic to him because they've never felt the wrath of a tweet from the president. He's the president of the United States. No matter what you think of him, you voted for him, you didn't vote for him, he's the president of the United States. He's the most powerful person in the world, and you don't want to do your job and be attacked every minute. So you give a statement like he did. So in that sense, it was statesmanlike because there really wasn't anything he could say that would make it so that it would be better. Now, a lot of people, and I have a piece in Real Money about this, a lot of people very stupidly, because the market's very thin, say he made a mistake because they see the Dow down, instead of thinking, ooh, let's see what is down that we should buy, like Microsoft. And I think that people have to recognize the market's so thin, a couple of large accounts can make this market go down. It never used to be that a couple large accounts could ever make the market go down. And we have seen a lot of commentary that is anti-Powell. Okay, now I was anti-Powell when he raised, I said, okay, I accept the fact that he had to do that last cycle. I obviously didn't want it. I was Powell's biggest critic. I think that's pretty fair. And now he's done what I want. So I don't then double down on my criticism. When a person makes amends, then you accept it. And he's making amends. That's what he's doing. This was a make amends speech. When you make amends, sometimes it's really hard to be as articulate as you'd like, but his heart was in it.
We've seen before, though, he takes almost every month when he takes the podium, the markets go down. So I'm wondering, is there any way that he can please the market?
Yeah, well, he just has to say, look, well, first of all, he shouldn't have a press conference every month. That was ill-advised. As a matter of fact, a press conference every quarter was fine. He's the Federal Reserve Chairman. He doesn't have to subject himself to that. Why would you? I mean, that was an ill-advised move. In fighting for transparency, what he ended up was having all these people make these wagers on whether it'll cut or not. I mean, that's like, to me, the wagers of the cut or not, which now I say, it's just stupid. I mean, those people, I don't know who makes those wagers. They don't really know anything. They've been wrong. A lot of the wagers have been wrong. I mean, it's like wagering on a tennis match. I mean, or wagering on football. I don't think it's consequential. It's just not consequential. These people don't know anything, and we take them seriously, the guys who make these bets, and we take the action seriously at 220 or 230, and you can't. This is not like the old days. This is a different market. This is a market that has no depth to it. So don't react. Don't say the market didn't like something. Because then the next day, the market was up, it made up half of what it was down at one point. Don't say the market didn't like, because it's just not like that. It's not the market. There's certain stocks that go up, certain stocks go down, and it's S&P dominated, so someone can come in and blast the futures and knock our market down just like they could knock the stock down. And we don't talk about it much because it would show you there's such a lack of depth in our market. Well, it's supposed to be the largest capital markets in the world, but the capital markets are deeply flawed because there's just not a lot of players. Because the market became a place where people stopped picking stocks. It's just big index funds going back and forth. And what you see is the market is a plaything, okay? It's a plaything, and people wager on it. It's sickening. It's sickening.
How can investors avoid the plaything?
Well, what they have to do is just pick. Someone was making fun of me today on Twitter because I say, what I want you to do is find really good companies, do research, and if you like the stock, buy it. And someone was saying, Cramer is a pump and dump. This is his method. I just look at it and say, what a hapless moron. I mean, geez, how is that bad? Do research on a company you like, If you think the balance sheet's good and it's growing, buy the stock. That's what you do. And now, a lot of people, I got in the market when the market was at 1,000, okay? And that I liked the market, and I was able to become financially independent because of picking stocks, and then I was able to make a lot of money because of picking stocks, and then I had an event in my life where I kind of divided the assets, and then I rebuilt. But it was always on the back of, until I'm not allowed to invest other than charitable trust, but it was always in the back of stock picking. And you can say what you want about what I've done in my life, but I am good at analyzing stocks and getting which ones are up, because that's empirical, or else I wouldn't have made the money. I mean, it's kind of counterintuitive. But in Twitter, no. In Twitter, you're an idiot until you're not an idiot. And
Sparky?
Right. Sparky. Someone called me Sparky for saying that I liked Beyond Meat on the secondary. Well, am I still Sparky?
We'll get to the secondary in just a minute, but I do want to ask you about your real money column from Wednesday afternoon, which you penned right after the Fed released its decision. Now, Jim, one thing that you said is when you're looking to pick stocks, look for the leaders. In this kind of market, how do you find the leaders?
Well, the leaders are the ones that bounce back the quickest in the sell programs. So you have a sell program, and what's a sell program? That's where someone comes in and sells the futures very hard in Chicago, and then that redowns and spills over and causes stocks to go down. So what you do is you watch those futures waves come in, and then you look to see what pops up during the last wave, usually the last hour of trading, the last 45 minutes. And if the stock pops up, then you have a stock that's a leader. And that's what you're looking for over and over and over again. That's what I do. Now, there weren't as many leaders because the way the sell program was yesterday, it led up at around 3:30. The market went up, and then it came back at 10 of 4. Now, that may be someone who was trying to mark stocks down to be able to say, "Listen, I got a better price." I mean, you can literally mark the stock market down like you used to be able to mark a stock down. And I'm looking for ones that were bouncing back up, like a Microsoft was bouncing back up. Apple was starting to come back up, but it got cut off because they marked the market down. But what you're looking for right now, and this is a good moment, right now you're looking and saying who's bouncing back, like an IBM. Okay, IBM, because Katie Huberty started with a buy, IBM is bouncing very quickly. That's one to look at, 4% yield. So see what comes back and then stays back even when the sell programs came back, as they did about 10 minutes ago.
All right, Jim, let's take a bite out of Beyond. They announced the pricing. Oh, yeah? So they announced it's our real money stock of the day.
Too many stories in my head.
Okay.
I'm going to do the PAL stuff tonight, All right, let's talk about Beyond Meat.
Okay.
Here's what happened.
What happened?
All right, Ethan Brown, who's a very charismatic figure. Remember, I compared him to Elon Musk.
The Elon Musk of food, you told me.
He has much more power and is much more in control of his stock, it's his company really, than almost any CEO I've ever seen. Now, what does that mean? Let's say you're doing business with Goldman Sachs, and you go in and you say, look, I want my secondary priced, or I want my IPO priced at 15. And they say no, there's a lot of demand, it's up to 25. And we do this for a living, and you don't. You make meatless burgers, and we price offerings. Now, I had that with mine, with TheStreet, and I said vociferously, no, we're not going to do that. And I got overridden because there's some of those people were my friends, and I didn't say to my friends, look, here's the way it has to be. I think that uniquely, Ethan Brown said, okay, here's the way it has to be. We want the secondary to be priced so that everybody makes money. We've already made a ton of money. He sold a little bit. We've already made a ton of money, so we'll sell some, because that's just good portfolio management. It was a very fractional amount for him. And then everybody who bought it got some. The people who bought it were long-only funds, so they weren't covering a short. Yes, it's illegal, so to speak, to cover the short, but people got around that rule all the time. I know that. I never did it. I always have these things where there's a tape of me being interviewed by Aaron Task. I never did it. It's haunted me for the rest of my life. I have to deal with it, but I never did it. But people don't care. By the way, I never said buy the stock of Bear Stearns. I said sell it that Friday afternoon. No one has that tape. With 33, went to. But I look at what he did, and he said, this is how we're going to price it. It was at 210. We're going to sell it 50 points below so that we're not greedy. We'll get new people in, And he created that price. He stood up to, that's what I believe. He stood up to the bankers. And it was a courageous thing to do. They probably did not want it nearly this low. He also wants the liquidity. He doesn't like a short squeeze. Does he think that the stock should be here, or does he think it should be lower? No. He's not thinking about the stock other than when they're pricing it. He obviously thinks it's going to grow into this price at one point, but he doesn't want a short squeeze because he doesn't want Tilray. See, he knows all these things. He doesn't want Tilray. So now the question is this Fitbit, where they broke the lockup and then it plummeted because the pipeline ended? Is it GoPro, when the goat was wearing the GoPro on the surfboard when I was in Hawaii, and its stock peaked and they opened up the lockup, and once the squeeze was ended by the new stock, the stocks just topped and never saw the light of day again. So people want to know, is this Fitbit, is it GoPro, or is it a legitimate growth stock that just happens to be kind of overvalued right now? And that's what we're trying to figure out. Wow,
and
that was long. I'm
sorry.
sorry.
That was very long. I haven't even asked you my question yet.
I wanted a big exposition because people ask me all the time, and in this particular universe that I'm interviewed here, there are no commercial breaks. And I think that's one of the reasons why it's enjoyable. I wish I'd figure out, well, why do I like this? Other than the fact that I think Catherine's terrific. There you go. And I like it because, we just go, it's free fire. It's stream of consciousness, a little Virginia Woolf-like. We have fun. And it's like a little like Faulkner in The Sound of the Fury, which isn't his best, by the way. And what I like to do is kind of go on a rant, not unlike the rant I delivered, 12 years ago on Saturday?
12 years on Saturday.
And it's amazing. They had Bill Poole on this morning at CNBC. I would have asked him, hey, can we run this tape? But that would have been mean. There's a lot, the meanness right now that the president has created. Hate him or like him, he is a meanie. That's what my little kids, my kids were little, used to call it. And J Pal did not want to be meet the meanie's wrath.
Completely agree there. So just let's recap on Beyond. So they have a secondary offering. They're priced at $160, which is 6 times what the IPO was at $25, but it's about 18.9% down from Wednesday's close.
Right.
So Jim, keeping all those stats in mind, do you think that investors should buy Beyond?
It's a great question because in the end, as I said when we did our show outside, we will be doing our show outside next Tuesday.
And I hope to be there.
Because it was such a hit. Thank you. We're going to try to do it all the Tuesdays. Summer sustainability. I hope you're there. I will check you out. An interview like this. All right. Here's the issue. It's Tesla. And I would want to wait to see if Impossible is also Tesla. Tesla's unique. If you have 2 burger companies, it may dilute things. We've got to see. Now remember, Impossible is GMO, all right? And I think the millennials don't like GMOs. Bar San Miguel, no GMO. But what will happen is we got to see whether it's a squeeze, how much is a squeeze, and how much is real. We don't want it to be Tilray. We don't want it to be Fitbit. We don't want it to be GoPro, and it might be. So if it's those, I'll really annihilate people to buy it if they buy it. So now you have an insider selling. Wait 10 days. The worst that happens is it goes back to where it was before they did this. I am uniquely, I have a vegetarian and a vegan. Now my vegetarian's wavering. I had some steak the other day. Not religious anymore about it. But I think very strongly that it's really a powerful concept. It's just, is it an 11 billion powerful concept? I think it's probably like a 3-5 billion. Now you look at a lot of the software as a service stocks, they're up there in valuations and no one thinks that they're wrong. People just think, listen, it's a food company, but it's much more than that. It's an ecosystem, it's an ethos, it's a belief that the way protein should be delivered is not through a cow. And it's very thoughtful. He's very thoughtful. He's a zealot. Elon Musk is a zealot. If you're going to short something, don't get in the way of a zealot. Fitbit and GoPro were not visions. They were devices.
And then you got Apple in their Apple Watch, which I switched from Fitbit to Apple Watch. So
love my Apple.
Millennials.
50% growth here. 50%
Yeah.
growth.
Pretty incredible. Millennials, wait 10 days before you trade Beyond. That's the advice
There's
here.
a lot of millennials who watch and they are on Robinhood and they trade a lot. And I respect that. I've seen a whole new group of people come in. It's been 15 years with the show and 24 years with TheStreet. And this is the first time I've seen young people come into the market. They're starting to realize that their college debt is so great that they actually have to be in the market in order to be able to make money. And believe me, they can find the Procter & Gamble's, they can find the Pepsis. I think PepsiCo under 130 is a good buy.
All right, Jim, so that's all the time that we have for today. We have to head over to Action Alerts Plus because I want to talk to you about Shopify and Twilio and a couple other names. It's going to be pretty exciting.
Sure.
So for all of you watching on Facebook or on TheStreet.com, head over to ActionAlertsPlus.com where we'll be doing our daily rundown. I'm Catherine Ross, and we'll see you tomorrow.